Thank you very much, Björn, and thanks a lot for the invitation, and also to Evis Victoria. I'm happy to present Galenica to you. We are the largest integrated healthcare provider in Switzerland. And let me briefly introduce Galenica to you, because if you invest Galenica, you invest in many different parts of the Swiss healthcare system. We operate 6 different business sectors, basically. On the top right, you see the pharma logistics, meaning pre-wholesale, wholesale. We deliver medicine from the pharmaceutical providers to the healthcare providers. This is our DNA. This is where we come from. We were founded almost 100 years ago in this area. We have large market share there. In the pharmacy channel, around 15% market share, and in the doctor's channel, 33% market share. Then on the top left, we operate the largest pharmacy network in Switzerland with 380 own pharmacies and over 200 partner pharmacies. Of course, also market leader with our own pharmacy brands. We have around 25% market share. Then in the middle on the top, home care services. We are specialized on clinical nutrition services. We provide blistering solutions for nursing homes and home care organizations, and care materials for home care organizations and nursing homes. Then on the bottom left, with Verfora, we have a large product platform. We're specialized on marketing and distribution of OTC brands in Switzerland. Also clear market leader. It's a very fragmented market. We have roughly 11% market share. In the middle, diagnostic services. That's a new business area which we acquired in September 2025 with Labo Team. Very interesting market. We have currently a market share of roughly 8%, of course, with the ambition to significantly grow in the future. And on the bottom right, IT solutions. We operate medication databases. On these databases, we develop clinical decision supports and e-prescription solutions. And we are integrated in all practice information systems in Switzerland. So important part also for our group to connect ourselves to other healthcare partners. You see there's big diversity within our group, within the different business models. That's why we consider ourselves as a network of healthcare, and we are convinced that each part of this network contributes value to the entire network. And let me briefly make a few examples on this simple overview. For example, the pharma logistics provides significant value for our pharmacies, not only in optimizing category management and inventory levels, but they also build a good pipeline for future M&A. We are very close to the market. We know independent pharmacists, and we know early on when they need a successor. They also provide now in the future good synergy potential for our diagnostic services, because we have the same customer base with the doctors, and we can now provide combined offers to the doctors and provide customer leads. Then the home care service, of course, we provide services to elderly people. Same customer group than our pharmacies. Elderly people need a lot of medicine. So we create a potential to collaborate with pharmacies and these nursing homes and home care organizations. The pharmacies themselves, they provide a good retail platform with the 380 own pharmacies for our own products. And as well in the future with that broad network all over Switzerland as well for diagnostic services. And on the bottom right, the IT solution makes sure that we are connected to all the other healthcare partners. We can drive the digitalization in Switzerland and make sure that we are part of it. Let me now briefly talk about the trading update. Now we're getting to the numbers. This is more my area. So we had a great year. We realized significant growth in 2025. We realized a growth of 5.5%, both in the logistics and IT segment with a 4.8% 8% growth, mainly fueled by the strong growth of the underlying pharmaceutical market. In the other segment, products and care segment, we realized a growth of 6.8%. This is a combination of strong organic growth with market share gains in the pharmacy segment, and as well successful acquisition. We acquired interesting new point of sales for our pharmacies, and especially the acquisition of Labor Team, which contributed roughly 1% to the group net sales growth. The strong growth in sales also laid the basis for the positive EBIT development. We could increase adjusted EBIT by 11.3% in 2025. We had also some tailwind with one-off items. So if we exclude these one-off items, we still had an EBIT growth of 8.3% in 2025. Now looking at the different segments, in the logistics and IT segment, the return on sales remained stable at 1.7%. This is exactly what we expected, because we currently still have an ongoing ERP project in logistics, which requires us that we have to run 2 ERP systems at the same time. But it's still difficult to realize efficiency gains, so it's absolutely in line with our guidance that we remained at this profitability level. And in the segment products and care, we could increase the profitability from 9.4% to 9.6%, also driven by the strong organic growth and the acquisition of Labor Team. Let me briefly talk about the 2 main drivers for this margin improvement. Generally, for us, there are 2 KPIs relevant. First, the gross margin development, and second, the personnel cost efficiencies. And both KPIs developed positively in 2025. We could increase the group's gross margin by 0.2 percentage points. On the one hand, with our logistics segment through price increases, and through products and care, even though in the products and care segment the margin slightly increased, but with that strong growth dynamic in this segment, it still contributed to a growing gross margin on group level. And in personnel costs, especially in products and care in the pharmacies, we worked further on the personnel efficiency cost efficiency, and could significantly decrease the ratio of personnel costs in the segment. Cash flow is an important topic. We significantly increased the cash flow in 2025 by 30 million, and now have an operating cash flow of 245.7 million. This strong increase was on the one hand driven by the strong operating result, but as well on the strict focus of the net working capital. So we could effectively negotiate better payment terms with our suppliers, which then certainly positively influenced the net working capital. At the end, the free cash flow remained of 188 million. So even after paying the prior year's dividend of 115 million, we could still finance a significant part of the M&A in 2025 with our operating cash flow. Thanks to the very pleasing result, the Board of Directors will propose a dividend increase of 8.7% at the next HCIM to reach 2.50 francs per share. So at the current share price level, this represents then a dividend yield of roughly 2.8%. Now looking into 2026, we've now released the numbers 2025 2 weeks ago, so I finally also mentally arrived in 2026. And we look with lots of confidence into the new year. We expect group sales to grow 5 to 7%, adjusted EBIT to grow between 6 and 8%. If we exclude the one-off items in 2025 of 6.2 million, this corresponds to an EBIT growth of 9 to 11% in 2025. Regarding dividend, we have the same strategy and the same guidance. We stay at least at the same level than in prior years. We also updated the midterm guidance 2 weeks ago because there have been several factors. We have issued the midterm guidance in 2023, and there were several factors that were not already included in the old midterm guidance. For example, the acquisition of Labo Team, but as well the closing of the production facility at Bixel. And we also have now much better visibility on the efficiency gains after the successful implementation of the ERP system in the logistics. So we could, with that updated midterm guidance, we could precise our profitability targets in the 2 segments. And this is the most important item in the midterm guidance. We could increase the EBIT target in 2027 from 250 million now to 270 million. So, plenty of reasons to invest in Galenica. Sorry for the crowded slide, but there's just many good reasons. But let me briefly summarize. We are in an attractive market, stable market, resilient market, also now with the global uncertainty, which is constantly growing and which has shown good growth rates in the past. We have a clear strategy. We have a clear strategic focus to execute the strategy, which pays for future growth and margin improvement. And we realize attractive cash flows that not only enable us to invest in future growth and in acquisitions, but also pay an attractive dividend to our esteemed shareholders. Thank you very much.